Ros Pomeroy has worked in the UK, mainland Europe, and Asia Pacific in a variety of areas, including sales, business strategy, and most recently, human resources and change management. She specialises in executive coaching and change leadership in both the public and private sectors. Ros, what are the most important considerations when preparing an acquisition strategy?
Well, I think any company that is considering an acquisition strategy needs to ask itself one fundamental question, and that is, what is it about a target company that is going to add value to the existing business? So by that I mean, what is it that if you combine the two entities, the two businesses together, will make something bigger and better than existed before with the separate organisations? So for example, is there some additional revenue potential that can be generated by bringing the two businesses together? Are there some efficiencies and cost savings that can be made? And unless those potential opportunities exist, what we would call synergies, then a company in acquiring another business is simply buying revenue, buying a bigger business with no value add, and that doesn't represent a good return on investment for the shareholders. So a company has to make a strategic assessment of its strengths and weaknesses and decide what it is that it might bring to the party, what could it add to a target business, or alternatively, what does that target business bring to the acquiring business. That is, if there are some gaps in capability, they may be something that can be bought through the mechanism of an acquisition. I think the third issue to think about in planning an acquisition strategy is really not to forget the implementation phase. It's very well and very possible to find a theoretically good acquisition, but ignore the difficulty of actually integrating that business. And that's where value can be lost. It can take longer for the business to be integrated. It can take longer for the synergies to be realised. And that can then make the whole proposition start to look rather flaky and again, not provide that return on investment that shareholders will be looking for.
Which of Renova's potential targets looks the most attractive?
Well, I think all four target companies have their potential. They have some attraction and they have, all of them, some risk. So what would need to happen is for each one of those targets to be given a very detailed assessment and analysis of the financial returns that might be available through an acquisition. So this would mean making an assessment of the synergies, any revenue enhancements, any additional cost savings that could be generated, and modelling those on a year-by-year basis, taking into account when those synergies would be realised. And from that, it would be possible to create a valuation of the company, what it is worth to Renova when they were merged together as two businesses. And from that would give Renova the ceiling of what they should be prepared to pay, i.e. the maximum that they should be prepared to pay for the particular target company. However, looking at each of the targets from a more strategic perspective, my assessment would be that Good Earth is the company that deserves a closer look. It needs looking at for some good reasons, and I think there are two of those, even though there are some question marks over what proportion of the business is for sale and at what price. But putting those to one side just for a moment, the two reasons why I think it deserves attention is firstly that it has a distribution network in South America, and that's established, and that's an area of the world where Renova are apparently not selling their existing product range that well, so that could be a useful channel for them to build their existing business there. The second reason is that Good Earth have some overseas production facilities which may represent an opportunity to manufacture at a lower cost and in fact higher quality than their existing production sites, which are entirely US based. You might have thought that Sheen hair products would be an equally attractive proposition, but what it doesn't have is that benefit of the international sales and marketing capability. And also, although it does have overseas production facilities, those have already come in for some criticism. And so I think there's a risk for Renova's reputation if it were to then take advantage of those production facilities. Of the other two potential targets, Hondo Beauty does have the potential to provide an opportunity to access the Southeast Asia market. But it is already very profitable, and there are apparently some threats to its growth prospects. So I think the ability to add value and get some upside out of that deal are quite small. And finally, Mumbai Herbal may be an interesting business from the point of view of its product range, which might complement that of Renova. But it's a relatively small business compared to the others, and with the issues around management, which I think exist, and the degree of control that would be possible, my sense is that that would be quite a difficult deal to pull off and not worth the investment of time and effort to make it happen. So I think that's more of a longer term bet.
What are the main risks and rewards in acquiring another company?
Well, the main risk is always that the synergies take a lot longer to deliver than was originally envisaged and was modelled in the original valuation. And that has a negative impact on the total value of the acquisition and reduces the return to shareholders. So those delays often arise because the implementation and the integration proves to be more challenging than anyone ever thought. Sometimes to do with differences in culture between the two organisations, particularly if those businesses are from different parts of the world. So a company that hasn't, for example, ever operated in some other territory that it has no experience of operating in before may find those challenges particularly difficult, and delays will be that much greater. As an example of that, the original bid that the insurance giant Prudential made for the Asian business of AIG was a case in point. There, strategically, there seemed to be a fit of the two businesses, but the shareholders took the view that the price that was being offered was too high given the risks of actually delivering the value out of the acquisition. The rewards, on the other hand, can be very great. It can take a business just too long to grow organically, and mistakes are made along the way, leaving the way open for competitors to get ahead. So a well-chosen acquisition can really create a step up for a business. Again, as an example of that, if you think back to the acquisition that the pharmaceuticals company Glaxo made, well, in the merger, in fact, with SmithKline Beecham, then the two companies together were able to pool resources in research and development, and they were able to shortcut the lead times required for the development of certain drugs. And economies of scale in pharmaceuticals is what it's all about. And with that merger of two already very large organisations, I think arguably a huge degree of added value has been created.